Dr. Uwaleke and 4 central bank deputy governors screened and confirmed by the Nigerian Senate. The team is coming at a time monetary policy system is being put to the test. Now, despite Nigeria being the largest economy on the continent in terms of GDP size, market volatility in terms of the foreign exchange sector has remained on the rise, as well as currency in circulation have also refused to be tamed. The IMF is saying that cutting down on expenditure is not enough to reduce Africa's debt burden, and calling for domestic mobilization of funds. But then you would ask, how? The foreign exchange market is before us this morning, and also on the menu is our education segment. What do you know about inflation and how does it affect you? We'll be bringing that to you, as well as our complementary market segment. My name is Leah Babatunde, and the policy returns in a bit. We begin the business of the day with major happenings that shape the economy in the course of the week. The Nigerian Senate this week confirmed the nomination of Dr. Uwaleke as the governor of the Central Bank of Nigeria, CBN. Cardoso was screened alongside 4 nominees for the positions of CBN deputy governors to steer the affairs of the Apex Bank in the next 5 years. The deputy governors include Mohammed Sani Abdullahi Dattijo, Nana Usoro, Philip Ekeazo, and Dr. Balabello. Cardoso and the deputy governors resumed late last week in acting capacity following the resignation of former Governor Godwin Emefiele and the former deputy governors. Currency outside banks rose by 90 billion naira or 4.09% to 2.29 trillion naira in August from 2.2 trillion naira in July 2023. The Central Bank of Nigeria CBN money and credit data for August also showed that currency in circulation stood at 2.66 trillion naira, representing a 2.7% rise from 2.59 trillion naira in July 2023. CBN's credit to the government rose by 0.62% from 32.5 trillion naira in July to 32.3 trillion naira in August. Data from the CBN money and credit statistics showed that credit to the private sector also rose by 1.1% to 54.7 trillion naira from 54.1 trillion naira. This resulted in a 0.92% rise in net domestic credit to 87.3 trillion naira in August from 86.5 trillion naira in July. The implementation of the Naira redesign and withdrawal policy of all banknotes by the CBN drew in about 1.81 trillion naira from currency outside banks, while reducing currency in circulation to 1.4 trillion naira in January 2023. However, currency outside banks has been on the increase since March, following a Supreme Court order that all 200 naira, 500 naira, and 1,000 naira notes remain in circulation till December 31, 2023. The International Monetary Fund (IMF) in a paper titled Navigating Fiscal Challenges in Sub-Saharan Africa, Resilient Strategies and Credible Anchors in Turbulent Waters observed that cutting down on expenditure is not enough to reduce rising debt in Africa. The fund noted that due to rising public debt within the region, it has become more difficult and expensive for African countries to repay their debts, which has sparked concerns of a looming debt crisis in the region. In navigating out of the debt trap, the IMF highlighted 5 policy actions African governments can take to preserve the sustainability of public finances while achieving the region's development goals. It noted that re-anchoring fiscal policy through a credible medium-term strategy would help avoid crisis. The IMF also explained that while cutting down on expenditures is a good move, African countries need to mobilize more domestic revenue and play a greater role in avoiding the crisis. The MSECB, a leading international provider of audit and certification services, has granted the Nigeria Deposit Insurance Corporation (NDIC) 3 ISO certifications. This information is contained in a statement issued in Abuja by Bashir Nuhu, Director Communication and Public Affairs at the NDIC. The certifications are in Information Security Management System, IT Service Management System, and Business Continuity Management System. The statement added that the certifications followed a rigorous and independent audit exercise confirming that the NDRC is in compliance with the requirements for the three standards. The ISO is an independent, non-governmental international organization that brings together experts from around the world to develop voluntary, consensus-based, market-relevant international standards that support innovation and provide solutions to global challenges. The Central Bank of Nigeria was fully in the eyes of the world this week as the Senate reconvened following a 2-month holiday. Foreign exchange demand remains unprecedented, particularly the dollar. Our policy in focus is the foreign exchange market. How did we get here? And of course, where are we headed? Well, Nigeria's foreign exchange market has been in the news for all the worrying reasons. We have a new sheriff in town at the helm of affairs at the Central Bank of Nigeria. And so we took our inquest to Professor of Banking and Capital Market, Uche Uwaleke of the Nasarawa State University, to gain some insights. You're welcome to this conversation, Professor.
Thank you so much, Leah. My pleasure.
So perhaps we start by having an understanding. How did we get here? How did we find ourselves in this crisis?
Well, the situation is not looking good. Not looking good in the sense that the demand pressure is still there. The liquidity challenge is still there. And that is why you find the volatility in the forex market. You recall that after the unification of exchange rates, what we call the parallel premium, the gap between the official exchange rate and the parallel market rate, virtually converged. But what do we find now? That gap has also started to widen, such that today we have the Naira exchanging at the official window at about 765, while in the parallel market is close to 1,000 Naira. So the gap you find between the official and the parallel market is being made worse or exacerbated by speculative attacks on the Naira. That's why I said it's still not looking too good. Many people are still having difficulty accessing forex from the official window, and that is why you find the pressure in the parallel market. So when, of course, you can't get forex in the official window, you may not have a choice but to resort to the parallel market. So the demand pressure in the parallel market is high, and that is why you find the exchange rate also going up. Now, I listened to this central bank governor. By the way, congratulations to him on his confirmation. I listened to his remarks, on the floor of the Senate. And of course, in my view, he made a lot of sense. He talked about the immediate need to clear backlog of forex demand. Because when you don't clear backlog of forex demand, whatever you're putting in place, people will not have confidence in it. Okay, so a confidence building measure is to ensure that backlog is cleared, and he has said that is going to be his priority, to make sure that they are cleared. And the other aspect that he also talked about, having rules that are clear, that are transparent, in consultation with stakeholders, that's also very critical, at this juncture, because that will also bring transparency, in the market. And the issue about people who have forex, trying to bring them into the country, will also be addressed when there's transparency, and when they are sure that there is stability in that market, which is critical. So yes, the forex market is experiencing a lot of challenges, but I also think that with the new team, there is hope. In the near future, perhaps, I'm pretty sure that that market will stabilize with all that they have said, they will do.
Okay, Professor, if I may come in here, looking at the foreign exchange market, is it a purely monetary authority issue, or it's got some elements of the fiscal authority?
Well, both. Both. Of course, the issue of forex, the issue of exchange rate is primarily the responsibility of the central bank. It's just as it's akin to the issue of inflation. Inflation is also the primary responsibility of the central bank. Okay, when we talk about price, the central bank has a primary mandate of maintaining monetary and price stability. And when we talk about price, we are referring to three prices. One is inflation, the other is exchange rate, the other is interest rate. Okay, so these three prices are the primary responsibility of the central bank. But in trying to manage them, the fiscal authority must also, come into play. The fiscal authority has a role to play. Take the issue of inflation, for example. All right, if you listen to the central bank governor when he was making his presentation, he also said that the fiscal authority has a role to play. That the monetary authority, for example, recognizes that about 50% of inflation is driven by monetary factors, increase in money supply. So that tells you that the other 50% is the responsibility of the fiscal authority. If you take the case of food, which is where the pressure is, all right, the responsibility to ramp up food production is not that of the central bank. It is that of the fiscal authority. So much the same way with exchange rate. Exchange rate is a primary responsibility of the central bank. But again, come to think of it, what is exchange rate? Exchange rate is the price of our currency in relation to, a foreign currency, all right? And that price is essentially determined by demand and supply. On the demand side, what do we know? We know that people are demanding the dollars today because of one, rising inflation. When inflation is rising domestically, the value of your naira is losing weight. And when people are losing confidence in the naira because inflation rate is rising, what do? They tend to substitute. We call it currency substitution. So they tend to now look for some other assets, safer haven, where they can also store their assets. So people are now demanding dollars more as a store of value. All right. So, and that is because of rising inflation. So people are demanding dollars again for various reasons. Why are people demanding dollars to go abroad to study? Why are they demanding dollars to go abroad to treat, for medical? So that tells you that our fiscal side has a role to play. If they can fix if infrastructure is tidied up, if we have quality education in Nigeria, if we have quality medical care in Nigeria, all right, the tendencies to go abroad to obtain these services, will reduce. So that's the responsibility of the government, not that of the central bank. Take another example, this issue of import of petroleum products. Do you know that is constituting a lot of pressure on our scarce forex? Because we are importing petroleum products, we are not refining enough here for local consumption. So the day you stop importing petroleum products, the day you will have improvement in liquidity in the forex market, because the demand will reduce. So whose responsibility it is to ensure that we refine our products, that our refineries are working, is not the central bank. It is the government, the fiscal authority. Those things that we ordinarily import, if you can produce them here, for example, you reduce demand. If you diversify your export base, you improve supply because you have something to exchange with the rest of the world. As it is now, what the central bank can do is more of demand management. On the supply side, there's very little because central bank does not print dollar. Central bank only prints naira. All right? The only thing the central bank can do is to see how we can manage the demand. And remember, unfortunately for us, again, it's not the fault of the central bank. We are a monoproduct economy. Over 90% of what we earn by way of forex is coming from oil, from just one product. So the way forward, therefore, especially in the medium to long term, is to ensure that we have multiple sources of forex and also try to check sharp practices, in the forex market, which is also why I think that part of what the central bank can do is also to look into this issue of the too many BDCs, unwieldy number of bureau de change that will have.
I was going to ask you if
Yes.
you agree with one of the presidential advisors who believes we're having too many BDCs, that their numbers should be trimmed. Do you agree with that?
There are far too many, and over 5,500 BDCs. Okay, that how do you control that kind of number? How do you supervise that, effectively supervise? So to ensure that that sector, that subsector of the forex market is effectively supervised, there is need to reduce the number. And how do you may not really begin to shut them because you gave them licenses in the first instance. But one way to do that is to increase the minimum capital requirement. So by the time you do that, a lot of them will be forced to merge or subject themselves as candidates for acquisition. All right. If you can have a number that is less than 1,000, maybe just as we have in the case of microfinance banks, okay, it will be more manageable.
Is that doable?
Oh, it's once you raise the capital requirements of BDCs today, and a number of them are not able to meet that capital requirement, okay, you know that they will be compelled. That's what I'm saying. It is regulatory. It's going to be a regulatory measure. Increased capital requirement, just as we did in the case of banks. At some point, we had over 89 banks in this country. When we did consolidation, they came down to 24. All right. So we can do the same thing in that sector to sanitize that sector. The central bank is just one institution that is handling not only monetary policy, but also financial system supervision. All right. Unlike in some other countries. In South Africa, for example, it's not like that. In the UK, for example, it's not like that. But here, the central bank, the functions are merged. So that's why the central bank has too much on its hands. And I'm saying, in order to even ease their work, they should reduce the number of BDCs, should come down. All right. Yeah. So the issue of forex is something that you approach, you have a calendar, you have a program. What are the short-term measures? What are the medium-term measures? What are the long? Just as the central bank governor, the new central bank governor, espoused or argued, on the floor of the Senate. But one thing I would like to add, which he didn't mention in his address to members of the Senate, is the issue of looking into the possibility of revisiting the currency swap arrangement we had with China. We had a currency swap arrangement with China. Why did we go into that arrangement? It was to reduce the pressure on the dollar. Okay, if you check our imports in the last 5 years, okay, take the report by the National Bureau of Statistics. Last 5 years, our imports have been more from China. So China has dominated our source of imports. So if you consider that the bulk of what you are importing has come from China, does it not make sense to see how you can settle transactions in China in Chinese currency, in the yuan? That's what that currency swap arrangement was meant to achieve. But because the size was small and shrouded in it, wasn't too transparent. Today, you can't really point to what it has achieved in terms of level of significance. So if we go into this honest negotiation with China to also settle imports from China in their currencies, it will bring a lot of relief. At the point we are in an emergency. The forex situation is really, really not looking good, and the expected inflows we thought we would have if we unified the exchange rate, hasn't materialized. And when you're in an emergency, you take extraordinary measures. What we can do now is to remove some restrictions around the forex market. By that I mean, allow people to bring in those that have made money, made dollars, taken dollars, give them, if you like, declare an amnesty for a while. Within so and so period, bring in your dollar. We won't disturb you, because they are keeping these dollars outside. And if you give them amnesty, there is the likelihood that some of them will bring the dollars in to invest in Nigeria. We want EFCC for that period, the Nigerian Financial Intelligence Unit, for that period, close your eyes. Let those things come in. All right. Okay. It's like sin no more, but bring those things in. Currency swap arrangement with China should be on the cards, in addition to the measures that the central bank governor mentioned. We hear some money coming. Sometimes we hear numbers like $20 billion in diaspora remittances, but the central bank will tell you they don't see this money because it doesn't go through the banks, so they are not captured. So how do you incentivize people to bring in their? It's also by opening up the system. Okay. Now, but there's a program that the central bank introduced under MFLA. I'm referring to the RT200. Yes. So that's a very good one. Yes, MFLA may have come and gone, but it's not everything about that admission that should be swept under the carpet.
So we need to see
exactly. We cherry pick which ones are good, which ones should we continue with. But that one also requires a lot of support by the fiscal authority, because one of the planks of that RT200 is the issue of dedicated port reforms. Yes, if you have done everything to promote exports and yet the ports are not functioning well, things get to the port, they stay days or weeks before they can go. Okay, so as long as those bottlenecks are still there will still be a challenge. I think if we do all this and if our people to also embrace some level of patriotism by also patronizing locally made products. This is the time for the National Orientation Agency and so on to encourage Nigerians to buy Nigeria, because the more we import, the more we buy these foreign things. Okay, I don't think it's helping the forex situation, it's helping the exchange rate. All right, but people will also ask, when you ask people buy Nigeria, they will now look at the person saying buy Nigeria. You have not bought Nigeria, and you're asking, yes. So the example should start from the top. Yes. So when they tell us to make sacrifice, everybody makes sacrifice. That's why Labour is agitating. Okay, Labour is agitating because they can't see,
sacrifice.
Yes, sacrifice. So that sacrifice should start from the top, from the executive arm, National Assembly. What sacrifice are they also making? By the time Nigerians see that they're also making sacrifice, we will, of course, yes, if you tell us to be patient, we'll know that you are making sacrifice. We should be patient.
I want to sincerely thank you, Prof, for making our time for this conversation. Thank you for all the insights.
Thank you, Madam Leah. Thank you.
Thank you.
My pleasure.
Have a nice one.
My name is Aldumi Kori. Keep watching The Policy with Leah.
It aims to provide policymakers an opportunity to explain their policies in a way that members of the public affected by those policies can understand and engage with those policies.
Keep watching The Policy with Leah.
Considering the prevailing economic fundamentals, we decided to simplify inflation for you. And of course, join me afterwards for a journey into the market square. For more on race in markets across the country, do well to log on to our sister website www.marketnigeriatv.com, and all the details are made available for you on that platform. The program ends here, but we'll return next week. And don't forget, you can subscribe to our YouTube channel. You can also follow us on our various social media platforms. Like us, of course, give us your feedback because we value them. We encourage you to do much more than that, of course. And we return next week. My name is Leah Babatunde saying have a beautiful weekend and God bless Nigeria. Happy 63rd Independence Anniversary.